So we're going to talk today about Western. As Misha said, it's a company that's recently been listed on the TSX-V as of January of this year, and then the OTC as of March of this year. I just wanted to make a quick comment on Tartan Lake. You dated me a lot on that. I remember being on that project when it was in operation, so that was a long time ago. So cautionary information and forward-looking statements. We will make some forward-looking statements. Just be aware of everything I say here is obviously in the context of exploration. So who is Western Exploration? It's a company that's been around for over 25 years based in Reno, Nevada with exploration assets in the state of Nevada. We went public in the TSX-V on January 19th of this year and the OTC in February. The assets that we own are not well known. They have not been in the public market for over 25 years, but that doesn't mean we haven't been doing our work behind the scenes as a private company where we completed about 54,000 meters of drilling since we acquired these assets in the late 90s. And the exciting news that we generated in the mid-2000s was sufficient enough to bring Agnico Eagle to the table, and they currently own about 18% of our equity. The two gentlemen on the right are Mark Hawksworth. He's the general manager of the project, and John Cleary, who's our senior consulting geologist, who's been on the project since at least 2000. Capitalization, very tightly held stock. There's about 30.4 million shares outstanding, 33.5 if you include the warrants that are issued. Current share price is about $1.45 Canadian. We have about $5 million in the bank, small debt that's owed to a related party. Our major shareholders is rather unique in the industry. Golconda owns about 66% of the company. Golconda was the founder of the company in 2013. They recapitalized it. It is a syndicate of high net worth individuals out of New York. There's about 70 different shareholders within Golconda. Agnico Eagle owns about 18% of the company. SSR owns about 1.8%, and management and directors owns about 3% of the equity. So why Western Exploration? I think there's three important things for a junior mining story. Jurisdiction. You know, the politics and the environmental policies allow you to develop what you find. I think in Nevada, we certainly can say yes. Our project is located at about an hour and 15-minute drive north of Elko on a paved highway, so very easily accessed from the city of Elko. And our nearest operating asset is a Jarrett Canyon mine, which is about 30 kilometers to the south. Asset is the second thing you need to answer. We think we have a very high-quality asset with near-term growth catalysts. It's 100% owned, no joint ventures. We do have a 1 to 3% underlying royalty. We have about 1 million ounces of gold in resource right now, 43-101 compliant, with about 10 million ounces of silver. That's hosted in 3 deposits that all look like they are very similar in age and genesis. Gravel Creek is our newest discovery and our highest grade deposit. It's an underground resource that was discovered by the company in 2013. It's high grade. Locally up to over an ounce per ton and greater than 20 meters in true width. We're planning a 15,000 meter drill program that'll be focused on expanding that resource and take about 18 months to complete, and that'll be on about 5 different exploration targets around the resource. The second area is Dobie George, high grade oxide, very different from Gravel Creek, which is sulfide. Dobie George is about 1 gram per ton. It outcrops on surface. It's about 525,000 ounces. There's over 800 drill holes in Dobie George. So we think with a small capital investment of about $5 million that will be starting here soon, we can get that to a pre-feasibility level of study within about 18 months. And Wood Gulch, last but not least, is our past producer, and where it's significant to us, it is the model that led to the discovery of the Gravel Creek deposit, and we're working on an exploration plan to now connect Wood Gulch and Gravel Creek together. Last but not least, the team that's here to deliver the value to our shareholders. We put a team together that's very strong and very focused on exploration. I was involved with the discovery of El Peñon in Chile when I was with Meridian. I spent about 23 years at El Peñon from the discovery in 1993 until about 2014. Our general manager of the project, Mark Hawksworth, discovered the Mercedes deposit in Mexico. Between the two of them now, there are about 12 million ounces of gold and about 300 million ounces of silver. How we're going to create value for our shareholders in this company. We have 2 paths here that are parallel, simultaneous at Gravel Creek and Dobie George, our 2 most advanced assets. Gravel Creek is going to be about drill, drill, drill. We're going to do about 15,000 meters, as we said. We'll continue with our processing path on flotation and grinding, and we'll talk a little bit about how we see our processing developing at Gravel Creek, and that'll lead to a PEA that'll be completed about 2024. At Dobie George, the project here is, or the plan here is to de-risk the asset as quickly as possible. We'll be going for some large diameter core drilling, which will be used to drive a metallurgical program. We currently have about 28 bottle rolls and over 26 column tests on Dobie George that show about a 70% recovery with a two-stage crush to about 1 inch. And that'll lead to a development plan, which will ultimately be a pre-feasibility study of about 5,000 to 7,000 ton per day. Why Nevada? I think we know that Nevada is one of the top-ranked mining jurisdictions in the world. Again, you can see where our project is located just north of Elko. We take advantage of all the services in Elko, of course, for drilling, geologists, et cetera, et cetera. We have the sound infrastructure, paved highway right from Elko to our project. Our trained workforce comes for the majority from Elko, but we're fortunate enough that there's a community within 10 kilometers of our project called Mountain City, where we actually have our office and have our core facilities, so we can be on the project in 30 minutes from our office. Our project, it's 100% owned. You can see it outlined here. We have about 62 square kilometers of claims that are owned 100% by the company. Again, 100 kilometers north of Elko, about 20 kilometers south of Mountain City, and just north of the Jarrett Canyon mine owned by First Majestic. We're about 8 kilometers from paved highway. You can see it on here. This is the county road that goes right past the Dobie George deposit and off to the paved highway, and our Mountain City office would be just off the map. Infrastructure, we have water and power nearby. These two yellow dots, well, I apologize, I pressed the wrong button there. These two yellow dots, these are our water wells, one there at Gravel Creek and one at Dobie George. Importantly, this blue area is patented land that we have access to through a mineral lease agreement. We can buy that land at any time for agricultural value up until the end of 2031. So their plan for Dobie George would be to put the development and infrastructure on that private fee land and keeping it off the public lands. The power line from the community of Mountain City and from the highway runs to right here where that project access road takes off to the Gravel Creek deposit. The resources here, we think we've got a target-rich environment with significant expansion potential at all these resource areas. Gravel Creek is currently about 600,000 ounces of gold and about 9.5 million ounces of silver. You can see the grades there. Dobie George is about 525,000 ounces of gold at close to 1 gram per ton oxide. And the Wood Gulch has a remnant resource of about 100,000 ounces of gold and almost 1 million ounces of silver. The deposits located here, Dobie George, Wood Gulch, and Gravel Creek. All of the deposits occur at a contact between these green rocks, which are the Paleozoic sediments, and the pinks and purples, which is the overlying volcanic rocks. Gravel Creek is a new discovery that was made by the company in 2013. We're focusing on high-grade intercepts in an area of about 1.5 by 2 kilometers. I'll just point out the metallurgical work that we have done. This is a sulfide deposit. Work that we did in 2018 showed that it was refractory to cyanide leaching. We decided to proceed with a flotation test work program in 2020 and 2021. It was very successful in that we recovered 95% of the gold and the silver to the float con, and that float con averaged almost 4 ounce per ton gold and 52 ounce per ton silver, and importantly, it had an 8% weight pull. So for 1,000 tons of ore, we produced 80 tons of concentrate. The nearest roaster that would take this concentrate is Jarrett Canyon, which is 30 kilometers away. The average width of the mineralization is about 20 meters, so amenable to bulk mining underground methods, and we have additional targets as shown here. This is the Wood Gulch resource right at surface, so the surface, topographic surface there, Gravel Creek down dip from it, and drilling in between the holes, these are the, or between the deposits, the only 3 holes have returned up to 10 grams per ton gold and 308 grams silver at that same geologic contact that hosts both of these deposits. So we've got a kilometer of strike length that we think we can expand there. Additionally, along strike and in the hanging wall of the Gravel Creek deposit, we're hitting low sulfidation epithermal veins of up to 40 grams per ton gold and over 1 kilo of silver that aren't in any resource at this point. So we see at least 3.5 kilometers of strike length for future resource expansion. We're going to expand that through drilling. We'll continue doing the additional metallurgical test work. Our float con, when we did a cyanide leach test on the float con, we recovered 60% of the gold from the float con. So we're thinking that we could do a fine grind and intense cyanidization and potentially produce doré on site. Ultimately, we want to get a resource update. There'll be one coming later in 2022, another in 2023, and a PEA in 2024 to demonstrate the economic potential of this new discovery. What it looks like in real world, this is the Gravel Creek deposit here in orange, the alteration that masks it in yellow. It comes up this fault zone. As it hits this contact, it expands into the footwall. You can see here the mineralization is over 20 meters in true width. Hole 437, which is very typical, it was about 21 meters of 5 grams gold over 100 silver. That type of grade continues over 500 meters of dip length down that fault. The deepest intersect we've got is 343 down here. 405 was about 15 meters of 5 grams. One of the last holes we drilled in 2020 was 448. We tested this hypothesis of this feeder zone, and 448 hit 11 meters of 3 grams of gold, confirming our geologic interpretation. It's low sulfidation epithermal, as I said. The mineralization is in sulfide, so it requires that flotation. The current resource has been extended over 400 meters of strike length and 600 meters down dip. Because of the width and the continuity of the mineralization, every 100-meter step out we make with drilling adds about 1.5 million tons of mineralization. So it adds up very quickly here. Why we like this area we call the gap. This is the Wood Gulch deposit right here. It's controlled by this fault. This is the Gravel Creek deposit. You can see in the geophysics the fault coming through here, and there's another offsetting fault that goes to the northeast. When we look at the best grades in both of these deposits, we see they're remarkably similar. You can see here up to 9 meters of 25 grams, 13 meters of 72 grams of gold. Then we look at Gravel Creek, which is over here, and we're seeing similar grades up to like 30, 28, 29, 28 gram per ton gold over significant widths as well. So the mineralization is identical between the two deposits with no drilling except those 3 holes in that gap zone that we looked at before. So this drilling here implies that we've got a system that is over 1 kilometer in this length and 1 kilometer in depth. So a very large mineralized system that remains to be drilled. What that looks like in the hanging wall, again, this is the mineralized zone here. These veins that are off in the hanging wall are in these photos here, and you can see up to 2 meters of 30 grams per ton gold and a kilo of silver in these low sulfidation epithermal veins that aren't in any resource at this point. Additional drilling is going to be required to bring them into resource. But it's another area where we think we can expand this deposit very quickly. Further afield, longer term, where we think we can add more ounces, this is the Gravel Creek deposit. This is the alteration zone around it that's predominantly silica, sericite, and pyrite. The arsenic soil geochem anomaly is following very well these geophysical breaks, which are mapping these big northeast structures that go through Gravel Creek, as well as these northwest structures. So all of those areas are being permitted as we speak. We're going to be doing geophysics and geology and geochemistry on these this summer to identify additional drilling targets, and that will be the drilling that follows up our resource drilling going forward. Wood Gulch. Why we like the Wood Gulch deposit is we now think that it is an analog and potentially will connect to the Gravel Creek deposit. This is the mine that was mined by Homestake in 1988 through 1991. The resource we have is on either sides of that deposit, as shown here in black. We now think that this controlling fault is identical to what we see at Gravel Creek, and that the potential between the two deposits remains to be drilled, as well as this feeder zone in the Wood Gulch deposit. That is currently permitted, so that will be something that we'll be drilling in the near future. You can see the past resource that was mined by Homestake here. They had about 423,000 tons at almost 4 grams gold, 24 silver in oxide. We still have that oxide resource there, but certainly with Gravel Creek being a sulfide deposit, we're not afraid to test the sulfide potential at Wood Gulch as well. Dobie George is very different in that it is oxide, not like Gravel Creek, which is sulfide. There's over 800 drill holes in Dobie George. Those were completed by Homestake, Atlas Mining, Independence Mining, and Western over the last 25 years. Bottle roll and column leach tests were completed by Atlas, Homestake, Western, and Independence on 28 bottle rolls, 26 column leach tests. The average is about 70% recovery heap leach with a two-stage crush of about 1 inch. This is the resource here, about 407,000 ounces in indicated. It's heavily skewed to the indicated category given the density of drilling. We do have additional inferred. You can see it here in brown below the pits and alongside the pits. That is areas that we will be drilling RC in the near future to bring those into the resource. The resource reported here is within the blue pits at $1,800 gold. Our plan here in the near term is to expand the mineral envelope through RC drilling around the deposit, assess crush size and recovery and leach kinematics to try and see if we can get up to 75% with the oxide and about 50% with the mixed ore, which is below the pits. And that'll be about 4,000 meters of drilling, which will be starting here in the next about 6 to 8 weeks. This will lead us to a pre-feasibility study of 5,000 to 7,000 ton per day open pit heap leach oxide. The idea with 5,000 to 7,000 ton with the resource we have, that would give us around a 7-year mine life, which would do about 50,000 ounces of gold a year. What Dobie George looks like in cross-section, I should just go back and here, this cross-section goes right across the Dobie main pit here at West Ridge. It outcrops at surface. You can see the best grades are right near surface, 7.5 meters, about 5 grams right here in this breccia zone, but it follows stratigraphy through the Paleozoic sediments down dip for a length of at least 250 meters, and the grade is remarkably homogeneous across that or along that strike. You can see 76 meters of 1.4 grams here, 41 meters of 1.2. So averages about 1 gram per ton through that whole strike or down dip extension of the deposit. About this area here, we'd start be getting into the transitional ore and down into sulfide below it. On the right-hand side, we can see where those $1,800 pits are on surface. A lot of this mineralization below the pits is going into transition and sulfide. And you can see in 2017, we drilled a deep hole. The target here was to hit that rock, or the lower plate sedimentary rocks that are famous for hosting Carlin-type deposits in Nevada. We did not hit that target, but we hit a zone very similar to Dobie George of replacement within the sediments where we got up to about 6 meters of 6 gram per ton gold, and that's about 780 meters down dip or 600 meters vertically below the Dobie George deposit. We know we have sulfide potential here. It's not our near-term target, but as we develop Gravel Creek and become more certain on developing an operation around Gravel Creek, these sulfide targets will become important as additional feed for any Gravel Creek operation. Why we think Dobie George has a very good chance here of being a high-quality development opportunity. These look at all the open pit heap leach type grades in the United States, focused principally on Nevada where most of them occur. But you can see the range of grades here with Dobie George being on the high end. Anything in gray is at a higher cutoff because it's mill ore coming from an open pit. Dobie George would be heap leach, so it would be one of the highest grade heap leach deposits in the state of Nevada. Additional exploration potential we have on the project. We've done a lot of soil geochemistry, airborne geophysics, and ground geophysics. You can see the distribution of geochemistry from soils that we've done in the project. These are the targets that were outlined by a geologist by the name of Dave Heberlein in Vancouver. Gravel Creek and Dobie George, you can see Dobie George there and Gravel Creek light up very well with our soil geochem as we'd expect. We found another very strong soil geochem anomaly in this area we call Maggie Summit, which has a strong alteration zone similar to Dobie George. There is no drilling within that yellow box. So we're currently permitting that area as a potential analog to the Dobie George and Gravel Creek deposits. Geophysically, you can see here, Gravel Creek, it's these strong vertical faults where they intersect that contact. Dobie George the same, and we have the same scenario geophysically right in that area. So we've got another target that we're looking forward to drilling probably in 2023 into 2024. Again, no drilling in that area at this point. Comparable company value analysis, how we think we're going to create value for our shareholders in the short term. We're currently valued at about $20 per ounce. We think by finding more ounces, we're going to grow, obviously, the market cap of the company, but we've got the opportunity to get up to this $40 per ounce level that our peers are currently holding on to, and potentially move to this higher valuation of $70 per ounce as we de-risk the Dobie George asset and demonstrate through a pre-feasibility study the potential to develop the Dobie George mine. Why we think we've got very good valuation and potential upside. We're in Nevada, leading gold mining jurisdiction in the world. We've got experienced management that's been involved in a number of discoveries around the world and taken them from the first drill hole all the way to construction and into operation. We've got a very solid resource base that we've already identified through drilling and put into a 43-101, and we're going to build upon that. Gravel Creek is a new discovery. Everyone knows these don't grow on trees. We're fortunate enough to have one. We're also very fortunate that it still remains open in most directions, and we look forward to drilling those 5 targets we've got around Gravel Creek to expand that resource. Dobie George, we're going to de-risk that asset. Near-term open pit production opportunity that could do 50 to 60,000 ounces per year. Not clear if Western would do that. We're an exploration company. That might go to a better home at the right time to finance the exploration work we do on the rest of the project. And then additionally, we've got exploration opportunities like the Gap, Maggie Summit, where we think over the next 3 to 5 years, we've got potential for additional discoveries to add on to what we currently know about Dobie George and Gravel Creek. That is the end of the presentation. On our presentation on site, we do have in the appendices the metallurgical work and the description of the board and management bios there for anybody to read. So with that, I can open it up to any questions.
Darcy, Western. Well, I of course have a question.
Of course you do, Misha.
I feel bad because I went through this beautiful presentation, but my question is that's on your second slide. Agnico Eagle,
yep.
17.5% holder.
Yep.
Most companies would shout that from the rooftops. I'm wondering, as Agnico, and the other thing that's interesting is that Agnico doesn't really have the U.S. presence. In fact, they just, in 2018, only got a 75% ownership in a project out there. Why is Agnico Eagle interested? When did they get in? Did they get private or?
They're always looking for opportunities in Nevada. If you look at Agnico's portfolio, they're in some of the major mineral belts in the world. Nevada is the one area where they do not have a significant presence, and they've been trying to establish that. When they looked at Western, they saw those good grades coming from Gravel Creek in an area that's relatively underexplored, and the opportunity to participate in something very early stage. So they became involved originally in 2017. They contributed $7 million US to the exploration program, and then they re-upped again in 2020 with another $7 million. They do have a technical committee with us, so their geologists work with us on targeting and exploration. And I was very fortunate when I was at Yamana as executive vice president. I was the co-chair of the operating committee for the Malartic mine, which was with the partner Agnico, so I know the Agnico team very well and work with them very well.
Another question I have, it's really a question for drillers and exploration companies, and I'm just joking. But in this time of cost inflation and I remember back in 2020, it became very hard for drillers to get their drill results. There was intense bottleneck. And I know that, in the last 12 months, we've seen, a lot of money come in. We've seen a lot of money flow out. But when the money flows in, the drillers start going and you get massive bottlenecking. Are you starting to see that? Are you starting to see cost inflation?
The last drill program we did, which was late 2020, our assay turnarounds were 6 months. So it was absolutely impossible to properly program a drill campaign with that kind of delay. I think they're down now to a month to 2 months for that, so it's gotten better. But I agree with you. If there's a big financing push in the industry, we're going to see delays again. What we've seen a lot of is new junior mining companies, new drill companies, but we have not seen a lot of new assay companies. And I challenge a lot of people, maybe in this room, to go out there and form the next assay company and publicly list it. Volunteers?
Question for Darcy. All right, Darcy, well, thank you very much.
Thank you.